Right now, the precious metals world is on fire. Gold is racing toward the unimaginable, the $4,000 mark. And silver, the metal that always moves louder and faster, is quietly positioning itself to become the ultimate outperformer of this entire rally. Today, we break down what just happened. Silver surging to a 14-year high, testing the critical $50 zone, and analysts warning that this could be the start of a historic breakout, not a blow-off. Let's dive in. The setup. What sparked this move? According to a TradingView Market Talk report published October 2025, gold jumped 1.3% to $3,935.59 per ounce, while silver surged 1.1% to $48.52 per ounce, marking one of its strongest performances since 2011. Priyanka Sachdeva from Philip Nova called silver gold's more volatile cousin, pointing out that it's now outpacing gold in percentage terms, a pattern we often see when precious metals enter a late-stage bull run. She explained that silver's dual identity, as both a safe haven metal and an industrial asset, makes it incredibly reactive to the current macro backdrop: rising inflation fears, lower bond yields, and a dollar under pressure. Her note said, historically, silver tends to amplify gold's moves during bullish phases, and that pattern seems to be playing out again. Gold nears $4,000, the catalyst. Gold's surge toward the $4,000 level is the headline story across global markets. It's being fueled by the Federal Reserve's softer tone on rate policy, persistent inflation pressures, and a decline in real yields that makes holding metals more attractive than bonds. But here's the twist. As gold pushes higher, silver tends to act like gold on steroids. In 2010-2011, when gold rose around 30%, silver rocketed more than 150%. And in 2025, we're watching that pattern repeat. Gold up about 40% year-to-date, silver up over 60%. Silver's dual role. Why it moves sharper. Silver isn't just another safe haven asset. It's deeply tied to modern industry. Everything from solar panels and electric vehicles to electronics and semiconductors. This dual nature gives silver a unique edge. When economic optimism fades, its safe haven appeal kicks in. But when growth expectations rise, industrial demand pushes it higher. And right now, both stories are aligning. Investors are hedging against monetary uncertainty, and at the same time, industrial orders from Asia and green tech manufacturing are strengthening. That combination creates what analysts call a macro-magnetic effect, where both investment and industrial sides pull silver prices up simultaneously. Breaking the 14-year ceiling. A second TradingView report confirmed silver has now hit a 14-year high, officially breaking past the $48 barrier for the first time since 2011. This wasn't just technical momentum. It came from short covering, ETF inflows, and physical buying from Asia, especially India and China. The tone in the silver market has shifted. For months, traders treated $45, $46 as resistance. But now that level is turning into support, and all eyes are on the big round number, $50 per ounce. FXEmpire, breakout or blow-off. FXEmpire's latest forecast called this exact setup a key $50 decision zone. According to their technical breakdown, a clean breakout above $50 could open a path toward $55 to $60 in the next phase. But failure to hold that level could trigger a short-term correction before another attempt later in the year. The article noted that momentum remains strong, with RSI indicators nearing overbought levels but not yet flashing a reversal signal. In short, traders are watching a tug-of-war between momentum buyers betting on 55 plus and profit takers expecting a cooling off around $50. Why $50 matters so much? The $50 mark in silver is legendary. It was first hit in January 1980 during the Hunt brothers' infamous cornering of the silver market, then again in April 2011 during the last great metals boom. Each time, it represented a cycle peak, but both of those peaks came during periods of tight monetary conditions and surging inflation fears. Sound familiar? Now, in 2025, we're back in a similar environment, except this time with real industrial demand backing the move. That's why many analysts believe this rally could be more sustainable than past blow-offs. The macro environment. Let's zoom out for a second. The US dollar index has weakened nearly 8% from its summer highs. The 10-year Treasury yield has slipped below 3.6%, and central banks around the world are quietly accumulating gold and silver reserves again. The Federal Reserve's tone is turning more accommodating, not officially cutting yet, but signaling that the tightening cycle is done. Markets are now pricing in possible rate cuts by early 2026. That's music to silver's ears, because every time the Fed eases or the dollar weakens, silver historically outperforms, often doubling gold's percentage gain. What's fueling demand? Outside of the financial market frenzy, the real economy is also contributing to silver's rise. Global solar installations are at record levels, with China alone expected to install over 250 gigawatts this year, each panel requiring silver for its photovoltaic cells. The EV sector continues to expand, consuming roughly 70 million ounces of silver annually, and electronics manufacturing, especially in semiconductors, adds steady industrial pull. Meanwhile, investors are returning to silver-backed ETFs after months of outflows earlier this year. Physical dealers report tight inventory conditions, a sign that real demand is starting to squeeze supply. Trader psychology, from fear to FOMO. Until mid-year, many traders avoided silver, believing it was too slow or too unpredictable. Now that sentiment has flipped. Silver's reputation as the late mover that explodes is coming true again. FOMO, fear of missing out, is creeping back into the market, and retail investors are re-engaging after watching silver stay quiet for years. The tone of online communities, mining forums, and social media analysts has changed from caution to conviction. Everyone's talking about the $50 breakout and what happens after it. The key scenarios ahead. Scenario 1. The breakout continues. If silver decisively clears $50 and holds above it for several sessions, analysts say the next targets could be $55, $58, and even $60 per ounce. This would likely require gold breaking 4,000 and sustained dollar weakness. Scenario 2. The pause or pullback. If silver fails to stay above $50, we might see a short-term correction toward $46 to $47, shaking out weak hands before the next push higher. FXEmpire called this a healthy reset rather than a crash. Scenario 3. Macro shock. A surprise Fed statement, strong jobs data, or a dollar rebound could temporarily cool metals, but the long-term setup remains bullish. How silver amplifies gold. Here's the simplest way to visualize it. When gold moves 10%, silver often moves 20 to 30%. Silver acts like the leverage play on gold, benefiting from the same monetary and geopolitical themes, but with a thinner market and higher volatility. That's why analysts like Priyanka Sachdeva believe silver is the quiet outperformer of the next precious metal cycle. And in her words, that pattern seems to be playing out again. Historical echo, 2011 versus 2025. The similarities between 2011 and 2025 are striking. Gold near record highs, inflation headlines everywhere, Fed signaling policy shifts, investors hunting for real assets, and silver suddenly stealing the spotlight. But the big difference? This time, industrial demand is real and expanding. That's what makes analysts believe this rally has deeper roots, not just speculation. The global ripple effect. As silver rallies, miners are waking up. Major producers in Mexico, Peru, and Australia are reporting rising profits and exploration budgets. Junior miners, often leveraged to silver, are seeing renewed investor interest for the first time in years. Meanwhile, industrial users are quietly hedging, locking in silver prices before potential supply tightness worsens. That's a bullish undertone often missed in mainstream coverage. So what does all this mean? Silver isn't just following gold, it's leading it. It's the metal that combines the story of safety, scarcity, and industry all in one. With gold near 4,000 and silver challenging $50, the stage is set for what could become the defining metals rally of the decade. If this move continues, silver could finally reclaim its place as the market's most explosive metal and possibly its most underestimated one. Let's see if history repeats, or if 2025 writes a brand new chapter. Disclaimer. This video is for informational and commentary purposes only. It's not financial advice or a recommendation to buy or sell any asset. Always do your own research before making investment decisions.